Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Thursday, September 17, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Don't forget that today it's a big day because at 2 o'clock we'll have the FOMC announcement concerning if the Fed is going to raise interest rates or not. And also we have the conference that comes after where every statement that Janet Yellen is going to make will generate volatility. So this is why on MarketGurus.tv what we have favored is to limit ourselves to day trading. If we take a look at this, folks, we had several opportunities for day trading, but the one that really stood out has been this stock here, EGY on New York on the energy sector. The energy sector has not been the most active today on the TSX, but there has been some exceptions on the New York Stock Exchange, and EGY has given us at least 3 entry points. Since this morning, it was recommended on MarketGurus.tv. Now, if you got into that stock, I think it's clearly right now a profit-taking opportunity. Concerning some opportunities that we had in the energy sector yesterday, I know the sector was one of the best performers yesterday on the TSX. We said watch a lot of stocks in the energy sector. Limit yourself to day trade them. Do not feel comfortable to hold to those breakouts of yesterday for swing trading, because some of them are pursuing the rally, but most of them really are having a slight increase. Look at Torque Oil and Gas. Yesterday, it surged by almost 12%. It was one of the best breakouts of the day, but the risk was there. Right now, the stock is only going up by 0.93%. It's kind of frustrating, and especially ahead of the FOMC announcement, we don't know what the Fed is going to do. So that remains a risk because you have not been in a position to at least take some profit on a stock like that is already surging by 0.93%. And there's Berkliff, which seems to be interesting, but Berkliff, there's still all those moving average there and that resistance that is stopping Berkliff upward momentum. So I do have a lot of questions, folks, today. So this show is mostly going to be focused on your questions. In terms of the news, one major news, there's a big consolidation going on in the cable sector. This company here, Cablevision System, is being acquired by a French company, and GM has been sentenced to pay $900 million. We have also the news on Potash Corp. Potash Corp, they said that they're not continuing actively the negotiations to buy their German competitor, which is KNS. but they say that the offer is still the same as they proposed earlier, so they're not pushing forward. And Orbit, what they say that they're moving forward with the construction of the HPA plant. In the third quarter, they expect the beginning of their operations to begin, and the commercial production will begin in the fourth quarter. So Orbit is moving ahead. Now let's take a look at the questions here from Adam. If Fed hikes rates today, will energy stocks continue their rally? Thanks. The question, Adam, the answer, Adam, to that question is no. The reason why is because yesterday, I don't know if you watched the show yesterday, but we published an article about Goldman Sachs saying the companies that will benefit from a rate hike and the ones that won't. And mostly Goldman Sachs, the statement for the companies that will benefit from a Fed rate hike will be the ones that have strong balance sheet. What is the situation of energy companies? A lot of them are at risk of being cut their funding by banks because, first of all, their reserves that they use to get access to a margin of credit, because they use their reserve as a collateral to get some credit from some banks. Well, the value of those reserves are going down because the price of oil is going down. Now imagine to that the Fed raises interest rate, so banks, they're going to charge their customers a higher interest rate. So they have first a probability of not having enough credit because their reserves are valued lower because of the weak commodity prices. And also they're having the risk of having to pay much more interest because the Fed raises interest rate and all the banks are going to the Fed to get their funding. Most of them do that. So this is actually a situation where energy companies will be impacted really negatively. And that was one of the key reasons why we said yesterday on Market Gurus TV and on the show that to get it into energy stocks, even if yesterday there were some breakouts, that it was risky to hold for those positions for swing trading, that the best strategy was to limit yourself to day trade, take some profits quickly on those positions, and make sure that at least if you want to buy some positions, wait to see how the market's going to react after the Fed decisions and also after Janet Yellen comments, because this will give us a clearer view on what the Fed's game plan is going to be and when are they going to raise interest rate. Is it going to be at the end of this year or is it going to be in 2016? If it's more delayed in 2016 or so, we could expect the energy stocks to pursue the rally because at least with the weak commodity prices, they'll have some certainty that the interest rate won't go up as much on their debt. So we have another question here from Travis. Let's take these questions here. Us. Okay. Good. So Travis has a question about WCP. Hi Chris, can you recommend an entry point for TWCP and an exit for swing trading? Where is the resistance? Well, it's a tough questions. We're having a debate with the team here to determine what's the entry point. The thing is that the stock is still within a neutral formation. The resistance is at $12, $11.70. I would say $11.70, $12 on the stock like Whitecap. The exit point should be at $10.50, but from that price to $10.50, there's at least 10% loss potential. Now the thing is in Whitecap, we have not yet reversed this downward trend on Whitecap Resources. I agree the stock has tested a bottom and is so far able to stand above this support, right? That has been tested many times, which is a good thing. So 1050 becomes clearly that it is the exit point. But what I would do, I think I would not feel comfortable to get into that stock ahead of the FOMC announcement. I'll watch it. $12, I think it could be a great entry point. The risk I see is first, the 10-day moving average, which is in red, has not yet crossed above the 30-day moving average. So for me, that's not as bullish. The other thing I don't like is that if the stock goes above $12, well, we know there's another point there at $12.59 where the stock could stop. Other targets where the stock could stop, yeah, you see it's clearly, even with the Fibonacci retracement, we're reaching $12.44, $12.55 on a stock like that. So if it goes above $12 entry point, but $12.55 is the point where you're going to have to take some profit. $10.50 is the point where you're going to have to get out. The thing I don't like is the big loss potential within this side of information, at least 10%, and the fact that the 10-day has not crossed the 30-day moving average. This is why I think it's important to watch how the Fed, how the statements of Janet Yellen are going to be interpreted, see if she's going to give some certainty about when the Fed is going to raise its next interest rate, what the Fed is going to raise its interest rate. And I think with that situation, we can have more clarity about what's going to happen in terms of financing costs for companies like Whitecap Resources, because we're going to know that if the Fed is still accommodative, well, companies like that might continue to do well because they'll have some more loose or better financing conditions, I would say, if the Fed keep the status quo. So $12, $10.50 as an exit point, but because the loss potential is too great, first, if ever the stock does break out, you know that you're gonna have to not open a full position. I would say go in gradually. $12.55, that is your first profit-taking opportunity on a stock like Whitecap Resources. Now, Jay here has a questions. You made a mistake, Jay. It was you wrote ETH, but I think it was EHT. So you bought it at the price of 60 cents, hoping to sell around $1. Well, $1, Jay, that's a lot. That's really far for that stock. What do you think technically about this company? Well, technically about this company, I think it is so far doing good in the sense that it has not went above its 50-day, 100-day, 200-day moving average. So there's still a big support there at 50 cents. I think it's the point where you should continue to hold on to that position. I would not wait until $1 to take some profit. I think it's too far. You're betting that the stock is going to reach the price of its IPO. I think when a stock is so volatile as that, you bought it at 60 cents. Let's say you make 5, 6, or 7%, take a first round of profit on your positions. Whenever you can make another 5 or 6%, which will be 10% compared to your first profit-taking opportunity, take another profit. And at $1, if ever the stock reaches its IPO price, I would say you can close totally that position, wait for the stock to stabilize again, and at $1 and higher, you could buy that stock. But right now, a stock that is a brand new story, you got in at a great price, I think. 50 cents, as I said, is an exit point, but I think that you should not wait at $1 to take some profit. I think that throughout the rally, if ever the stock can pursue its rally, that you should take some profit whenever you make a 5 or 6% compared to your actual paid price. I think that right now we're due for more of a correction because we have a negative top that is being confirmed on the stochastics. So there's a risk that you might have to get rid of that stock, but so far stay technical, and as long as the stock doesn't go below 50 cents, you should hold on to that positions. And whenever you make a 5 or 6% compared to the price you paid, you take some profit. It's important. So we're going to take a break, and we're going to continue with your question.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So I have one question from Bear. Hi Chris, about today, TH at 232. Despite the incoming Fed suspense, it looks like the consolidation phase might be over and stock starting to retake up. What is your take on it? Any thoughts? Well, technically speaking, I think you got in really at a great time, Bear. Really, you know, if the Fed raises interest rates, of course, we could expect a wave of sellers on the market. But a company like that, just looking technically speaking on this company, it's doing pretty well. You got it on the great entry points, I think, on that stock. The thing is that the stock is already surging by 11%. So are you going to be able to tolerate a loss until $2? That's becoming really too much on a stock like that. So what I would do, I would say that if ever we lose all of today's gains, put your exit point at 215 on a stock like that. Now the stock could reach 251. That could be a next target. So far, we're not yet overbought. So for those reasons, I think you really got into a great stock for those reasons, because technically speaking, it's a nice buy, nice upward trend on that stock, 251 at least, or a little bit higher. You could take some profit on a stock like that whenever you make a 5 or 6%. But because it's already surging by 11%, exit point 215 instead of putting it at $2, because with your price paid in $2, it's too much of a loss potential. So you need to make sure that you minimize the risk by putting your stop loss a little bit higher instead of $2. So $2.15 should be your stop loss, but a great job there. Now, Mandy, is it good to change your mind when you buy a stock to day trade but decide to hold it for swing trade because it goes down at the end of the day? Thanks. No, Mandy, it's not good. And I think it is a mistake. It is a mistake that I used to do when I first started to trade. And my portfolio took a big hit. And finally, I realized that I needed to change my habits. So what we are recommending usually on Market Gurus.tv is that if you're buying a stock and the stock has surged or at least kept its gains, you were day trading that stock, well, you can hold to that positions overnight for swing trading, because at least you have some gains on that stock. And if ever you see tomorrow that the stock slightly goes down, well, because you have some gains, you can at least take some profits, even if they're not going to be as high as yesterday. So this is one of the reasons why, if you're day trading a stock and you want to hold it overnight, you need to make sure not that the stock goes down, but at least it can keep its gains. For instance, look at a stock like Goldcorp, right? Yesterday, Goldcorp has been one of the best performers yesterday. Goldcorp, if we take a look at the situation here, right? Goldcorp has been one of the best performers, but finally throughout the day, we saw that the stock was starting to lose its gains. All of the gains that happened here, it started to lose them. So you saw the stock starting to lose some gains. What we said is that if you're already taking some profits, okay, you can hold to your positions overnight. And right now, at least you are taking some profits. So now you see you lost all the gains of yesterday on Goldcorp today. So this is one of the reasons why whenever you see a stock that is starting to show some signs of weakness, reduce it. It's important. So instead of that, let's say you bought 1,000 shares of Goldcorp, right? And today you're losing all this money on 1,000 shares. But let's say you bought yesterday 1,000 shares of Goldcorp, you sold 500 because you saw some weakness. So now today you're a little bit happier because you're losing money on only 500 shares instead of 1,000 shares. So this is why it's important that if you want to hold a stock overnight, you need to make sure that at least you have some profit. So for instance, if you bought Goldcorp on September 11, that stock has rallied, has maintained its gains, and you saw tomorrow, even if we're losing some money, but you didn't lose as much as the gains that you made on September 11. And since then, Goldcorp has rallied, and that was the point where you could have taken some profits on a stock like Goldcorp. So on September 11, holding to Goldcorp overnight have paid off. But on September 16, the stock showed some weakness at the end of the day, and you saw that the next day after, the stock went down, and you lost all of the gains of yesterday. So this is why it's important to make sure that the stock can at least maintain its gains before holding to that stock for swing trading if you're day trading a stock. Now, RIC. So RIC, if I take a look at this stock here, analyze please. Analyze. The stock is in a clear neutral range. There's still that resistance that's there. For me, it's 411 that needs to be broken out. As long as the stock stays within its neutral formation, I'll not feel comfortable to get into that stock. The thing is that the longer we stay within a sideways formation, the better is the technical signal that can come out of it. But for me, it's clear it has to be higher than 415, 411 on a stock like Richmond Mines. The good thing with that company, though, is that with all the sell-off that we had with a lot of mining companies, this company here is able to maintain itself within that bracket. But I'd like to see the clear break of that important resistance of 412, 425. Right now, we're in an overbought situation, so I will not buy that stock at all unless, if we break that resistance, we had a situation where the stochastics was around here and was heading towards the overbought situation. So for me, Richmond Mines is not a buy unless it breaks 411, 412, which corresponds to that important resistance on a daily and a yearly basis. So folks, we have other questions, folks. A lot of them are interesting. I'm going to take them for tomorrow, folks. Signal Tom. So I'm going to answer them tomorrow. Be sure to be logged in tomorrow. As for the day trade of the day, I've shown you it's that stock here on the energy sector, Valco Energy. So make sure that, folks, if you bought that stock, make sure that you quickly take some profit, especially ahead of the Fed decision at 2 o'clock. We're going to have also the statement by Janet Yellen. This is going to be really important to determine what's going to be the Fed's game plan. Are they going to raise interest rate later this year because they have also a meeting in December, or is it going to be in 2016? So this is important to watch. And so far, I think that for those of you who want to buy some positions, I think the best strategy is to stay on the sideline, but to only limit yourself to day trading and close those positions ahead of 2 o'clock. So that said, see you tomorrow on the Swing Trading Show on DecisionPlus.com.